All right, welcome to another edition of the Lumen Sessions from Alt Marketplace by Formidium. My name is Shalin Madan. I'm the co-founder and chief growth officer of Formidium, and I have today the founder and CIO of ML Tech, Leo Mindyuk. How are you doing, Leo?
I'm doing great. Thank you for having me.
Absolutely, and we've known each other now for a couple of years.
Your organization prepared for tomorrow's challenges today? How will you adapt to the future of investing? Formidium creates intuitive and progressive tools for the next generation of fund management. Tools for fund administration of every asset class, digital investor onboarding, CFO-tailored consulting services, comprehensive tax reporting, and even a thriving community showcase for fund managers and service providers. Evolve with the future. Be formidable. Formidium. Adapt and prosper.
Yeah, so it's good to have you on a real conversation. And frankly, it was only until a couple of weeks ago did I really understand what you do, and I found it very interesting. And I said, why don't we have this conversation? I want to learn more about your fund, of course, but why don't we share that with the rest of the world?
Yeah, thank you. It's a pleasure to be here and talk about ML Tech. So let me start a little bit about the backstory, how it all came about, and then I'll tell exactly what we do. So
Sure.
my background is in quantitative finance. So I was doing options market making on Chicago Board of Option Exchange. Then I was doing high frequency trading on CME New York's across multiple asset classes. And then in 2017, I saw opportunity in digital assets where a lot of strategies that I was running on traditional markets, they can be applied to digital, and opportunities in the market was just like much larger. A lot of price inefficiencies, a lot of retail flow that was very interesting to see, different exchanges, different cross pairs. So I started crypto trading desk in Chicago, in proprietary trading firm called Bluefire Capital. 2017, 18, 19 was kind of early days still for crypto markets. So definitely a lot of opportunities. And the business kind of consisted of a few different parts. One of them was algorithmic OTC desk, where we would interact with institutional clients who want to execute bigger orders on Bitcoin, on Ethereum, across different cross pairs. So for example, we would do Bitcoin Euro or Ethereum Pound, and then we will hedge it on the market through our risk management system and kind of inventory management system. So this was one part of the business, and through that I got to learn a lot of institutional clients who wanted to get actual exposure to our other part of business, which was different systematic strategies that we would run on crypto exchanges like Binance, OKX, Deribit, BitMEX was big in the day. And then they would ask us, how can I get exposure to those type of strategies? And for them, they had two options. One was develop their own infrastructure and kind of build everything in-house, which is very time consuming. It's very resource intensive. And then the other way is to invest in hedge fund. So a lot of hedge funds in the space back in like 2017 and 18, they were kind of having not very good reputation. So many people kind of were concerned about giving money to a hedge fund and then not really knowing what's happening within that. So I kind of saw the opportunity to bring strategies in a much more transparent and secure way. So that's how the idea for ML Tech started. So in 2020, I left Bluefire. Bluefire actually was in discussion and got bought by Galaxy Digital later this year in 2020. And then I left before the acquisition completed to start ML Tech. So it's been almost 5 years now. So what we do now, we have we call it wealth management platform. So it has a variety of different systematic strategies. Right now it's on the digital assets, but over time we expect that a lot of assets will be tokenized. So it's going to be multi-asset platform. So investors come to us, they have access to different strategies ranging from arbitrage, statistical arbitrage, CTA types, all the way to systematic directional exposure. And then,
Wow.
So basically what happens is they can invest whether through managed accounts or through the fund. And we actually use Formidium as the fund administrator for the fund.
Yes, you got through like my first 5 questions. But why don't I step back a little bit? I'm curious, how did you come up with the name ML Tech?
Yes, that's a great question. So I saw the potential in machine learning and AI early on. Back in 2020, .ai domain was not as popular
Yeah.
as it is now. So we got a very good deal on our domain. So our domain is mltech.ai.
Yeah.
So the idea was that there's a lot of different systematic strategies and a lot of data. And eventually, all this data can go in kind of like a big model, which really can be customized for particular investors, right? So imagine that you're an investor, you come and you get custom portfolio specifically developed for you. And with machine learning technology and AI recently, like it's becoming more and more easy to do that. So, on Netflix or Amazon, you get recommendations, you get your kind of personalized content. In investment management, it doesn't exist yet. So what we're trying to do is to really move the finance to the next level, right? So to open up this more customized approach to investment management.
It's very interesting, actually. I actually had a hedge fund myself, and the goal was to evolve it into an AI hedge fund. This was back in 2017. But for various reasons, I was scratching my head, especially at that time, about how I could do it and what the runway would be and when that would actually be possible. So it's phenomenal that we are at that stage 7 years later. So that's a long time in our lives. I want to know how are you using machine learning right now, perhaps, or any sort of AI?
So first of all, a lot of traders that send signals to us, they use machine learning in order to do predictions on the market. So there is different sorts of machine learnings that people use, as well as some AI. We have some models that actually driven by AI. So they construct the factors that used in the AI. We also have some models that combine different strategies using AI. And what's kind of more interesting and what I was talking about kind of on our end is really portfolio creation and customization. So one big project we are working on now is all this data that we've been collecting about people's preferences and the type of questions that they've been asking us about the strategies, kind of learn underlying risk, learn underlying parameters about the strategies, how we can take all this unique data that we collected and really make it both personalized recommendations to people, but also they come to us and now they can get answers to a lot of questions in much more efficient way. So that's a lot of work that we are doing now with this unique data that we've been collecting over the past 5 years.
And I'll plug another company that I'm working with that actually does that through chatbots and avatars, so video avatars. So I won't mention the name, but well covered if you need any help. That's excellent. That's excellent. So what does ML Tech do that is special? Like, how would you consider yourself to be different than other quant crypto funds?
Yeah, so one big difference is that we are really like a wealth management platform rather than just a fund. So investors can come in the fund and get exposure to a variety of strategies and a mix of strategies that we have. But really, a big value there is investors come to us and they have different type of strategies. So we can really customize on their risk return preferences, right? So if someone wants lower risk strategies, maybe arbitrage is more kind of like, let's say, it's better fitting their needs. If they want higher risk, they may want some directional strategies. We also can accept different type of collaterals. So let's say you want Bitcoin exposure and then you want to generate alpha on top. So we have a lot of this customization. And the way how we achieve this, we actually built an infrastructure where signal creators, so it can be like a professional trading team that sits in Europe or sits in Singapore, they can use our infrastructure to send signals to our basically signal receiver, then it go into our risk management layer, and then we can execute on the client's accounts. So this allows us to actually get access to a lot of different signals, a lot of different strategies, and then offer investors this kind of menu of strategies in one place. So instead of them going and like finding 10 different hedge funds, they come to ML Tech and they get exposure to, first of all, a variety of strategies they can choose from, but also these custom portfolios that we can create specifically for their needs. And that's really, I don't see this kind of anyone else doing that in the space. So there's a lot of quant hedge funds in the space that trade their own particular strategies. But we are really building a platform that's next generation platform for digital assets.
That was the word that was going to come top of my head as well, which is it's absolutely interesting. It's a platform. You see instances of that in TradFi, of course. But what you're saying is that in the digital world, this is fairly unique. It's very cool. Very cool. I'm curious, could you employ, you did mention that you worked or were looking at strategies in the traditional finance world. I'm curious, could you employ your strategies in equities? I assume so. But how would you describe the efficacy difference between, say, FX, equities, and crypto for your strategies?
Yeah, so it's very interesting actually. So depending on the type of strategies, you have similarities with different markets, right? So for example, equities is very similar, statistical arbitrage in equities is very similar to statistical arbitrage in digital assets. And then you have like arbitrage strategies that are more similar to like spot versus futures trading, right? Or you have CTA strategies that are more common in commodities, for example, or FX. So it's actually very interesting because you have in digital assets, you have so many different products and you have so many different exchanges and you have just like a variety of different strategies. So some strategies are more similar to what people do in equities, some strategies more similar to what people do in commodities and futures. So I would say if we talk about equities in particular, of course, equities market is much more competitive than digital assets still. So in digital assets, you have much more opportunities. However, what's becoming interesting is that a lot of strategies that we have can be actually ported to different asset classes. Mm-hmm. And we build this community of signal creators, which are very talented. Those are like professional emergent traders. And we definitely have many of them coming from traditional markets. So they have experience, whether in equities trading or futures or commodities FX. We started doing options recently as well. So options become a really popular thing in digital assets as well and growing demand there. So we can talk about this later. But the idea there is a lot of strategies that those people build and a lot of signals that are transferable. And over time, as I mentioned, our plans is to be multi-asset platform and really kind of compete with players like multi-managers in traditional space, but those multi-managers, they have only one product typically. With AI, machine learning, and this new data that we have, we can offer much more customization. So it's kind of next level of multi-strategy approach.
Yep. You can kind of get what people are traditionally would have gotten perhaps from the fund of funds, try to get those diversified streams of return, but, via in-house strategies. Mm-hmm. And I would even imagine in-house artificial intelligence strategies at some point. Mm-hmm. Okay, well, let's say that I'm a trader and I want to be on the ML Tech platform. How would I even go about that process?
Yeah, so the process of onboarding is kind of pretty similar to what would be if you were to join, like, let's say, Millennium or Citadel, right? So there's a lot of due diligence on the strategy, on background of traders, understanding the risk about the strategy. So we have due diligence process that involves both qualitative and quantitative aspects. So on quantitative aspects, it's typically data related, understanding the risk, understanding correlation with the strategies that we already have, the signals that we already have, right? So we want to find something unique. A lot of strategies in the space are actually kind of similar things that people do, So for example, like fund and rate arbitrage, like there's probably 500 different hedge funds that do fund and rate arbitrage with different flavors. So we are looking kind of for unique things, and this is on the quantitative side. So a lot of data analysis, understanding correlation, understanding risk factors that go into the strategy. On the qualitative side, it's more about experience of people, right? Like, were they working in traditional markets, what they were doing there. Then we also do reference checks. We talk with friends in the industry that might have these people in common. So a lot of due diligence goes into that. And then when we actually onboard the strategy, there is the whole process when we start recording the data, when it goes into our systems, when we analyze how the data, like how different the signals are, what the risks are, how we restrict the strategy within certain risk parameters to make sure that it's running exactly in the same style as it should be running. So a lot of things before we start actually scaling the strategy. Mm-hmm, and on the scaling part, just to explain a little bit more, so we typically offer two approaches to clients. So we have approach where clients can kind of choose the strategies that they want. So maybe, they want like 30% in a directional side. They may want like 40% in funding rate and the rest in like statistical arbitrage. Or some of the clients come to us and they may have, let's say, I have 10 million portfolio. I want to generate this type of risk return profile, and we will create this profile for them. So this is like two different approaches. One is kind of like people have more discretion. They want to be a little bit more hands-on, see what fits in their existing portfolio. The other approach, they give us kind of parameters, and then according to these parameters, we create a portfolio and we manage this portfolio on their behalf. So very balanced, like let's say we see more opportunities now in short-term directional strategies, we will move more money there, we adjust risk accordingly, etc. So there are two different approaches there.
And, most of your business is separately managed accounts, but you do have a fund of funds, and so I'm curious as to is that the process you would use for your fund of funds as well, where you would dynamically allocate across these different
So,
strategies?
we don't really call it fund of funds because it's a multi-strat. So we don't
Yeah.
invest like money into external funds.
Okay.
It's all going through our systems. We are in full control of the risk and execution. So it's we call it multi-strat. So kind of
Sure.
similar in
Sure.
traditional markets, what's like Citadel or Millennium is.
Yeah.
So yes, we have a product, and there are a few different actually share classes within this product. So what we do recently, and it's been actually popular with some of the bigger clients, we create a separate portfolio for them, and instead of doing it in managed accounts, they can come in at the fund. So the big difference is that some clients just prefer to go for the fund structure because that's something that they're already familiar. We have like better fees on the fund for execution because there is like if let's say you're a family office, you're new to crypto, you may not have your Binance account or a KX account, right? So for you, like fund maybe more interesting, but at the same time, if you want like more risk than our kind of default fund, we can create a custom share class for you, specifically for your risk return profile and whatever your goals are.
Interesting. So you can effectively create the customized portfolio in the actual limited
Exactly.
partnership or
Exactly.
vehicle. And apology, by the way, I think I slipped up by saying fund of funds. Of course, it's a multi-strategy fund. Why can't I just, okay, so one of the issues is, let me go back for a second. In the equities markets, one of the persistent issues now that has come up for long short equity and possibly even quant managers is why can't I just buy the S&P 500? Why do I need you? Right? So I will ask you the same question in crypto parlance, which is why can't I just buy Bitcoin or Ethereum and call it a day? Why do I need ML Tech?
Yeah, that's a great question. And of course, as Bitcoin and Ethereum performing really well, I mean, Ethereum still, I think, is going to perform quite well for the cycle. So we see this question quite a lot. So what we actually offer, it depends on the strategy type, right? So we have strategies that the goal is to outperform Bitcoin and Ethereum, and you can do it in different ways, right? So you have strategies where we can actually have the beta exposure and then generate alpha on top. So imagine it's the same as you, let's say, hold 100 Bitcoins, but now instead of just holding and getting zero yield, you can actually get yield on top of your Bitcoin. So it's going to outperform your Bitcoin holding. So this is like for someone who wants to do better than Bitcoin. Then outside of that, we have different types of customers, right? So some actually want returns that are uncorrelated to Bitcoin or Ethereum. So majority of our strategies are quantitative strategies that have close to zero correlation to underlying market. So they make money in different market conditions depending on kind of volatility on the market, depending on the volumes, on the flows. So it's not necessarily that this strategy is supposed to make money when the market goes up or goes down. It's non-directional strategies that actually monetize the opportunities in the market rather than direction of the market.
Makes sense. Makes sense.
And it's actually so
yeah.
I'm just curious. Like you have a lot of experience in traditional markets, of course, as well. So it's kind of similar as a lot of funds, right? That basically S&P 500 performs so well over the past 3 years, right? We've seen like 30%. Like it's really outperformed actually Nasdaq. I recently looked like it's S&P 500 doing better than Nasdaq. S&P 500 doing better than most of other markets. It's actually very impressive over the past few years, right? So a lot of hedge funds in the equity space, for example, they only make like 8-10% returns, and yet they're at capacity, right? Because there is so much demand for those uncorrelated returns.
Yeah, I think that the reason perhaps a lot of hedge funds can only make 8 to 10% is because they're at capacity and they're so large that they've effectively excluded themselves out from higher alpha, higher performing strategies. So, that is why I guess smaller quant funds, even in the TradFi space, can actually do well, and then why digital asset trading funds do exceptionally well because it's just a new opportunity. It's also why people who trade emerging market currencies, I think volatility is a friend, and volatility is a friend to returns. So if you can manage that volatility, and actually that brings me to my next question about how you think about risk. You can do quite well, and I don't know of any more volatile market than crypto.
Yeah.
So
Natural gas is the one. I used to trade natural gas, so But
Yeah,
yeah,
so did I.
crypto is
The widow, they
definitely
call it
one of the top.
the widowmaker. That's what they call it. The natural gas is known as the widowmaker trade. Um, although one could have just been short probably for all these years and made a lot of money on the roll as well. Um, so let's talk about risk. What is your definition of risk? I mean, and I bring that up because I speak to a lot of different investors over the years. I was an allocator, just for those who don't remember or know. And so that would always be a top of the mind question, and everybody kind of has a different answer. So I'm curious, perhaps you could communicate to the audience how you think about risk and what your definition is.
Yeah, definitely. So risk is like we can probably have multiple hours discussion just about the risk, right? But I think about risk as multi-level approach. So you have different types of risk, right? You have kind of your trading risk, you have counterparty risk, you have like regulatory risk, you have different sorts of risks. Especially in digital markets, some of those are actually higher than in traditional markets still, right? So most of the day, of course, it's something related with the trading risk, and this is something that's easier to control because you have kind of directly like it's the strategy running. You can put like stop loss. You can have like exposure maximum. You can have net exposure. You can have maximum positions. You can have amount of orders. So those are kind of like very easy things to do from the perspective of like risk rules. But then you go into like higher level risks, right? So you have like different factors that affect the performance of the strategy. So some of the strategies depend on funding rate to generate return. Some of the strategies depend on, let's say, small versus large cryptos, right? So they may be short larger cryptos and long smaller cryptos, right? So this is another level of risk. So we go actually quite deep on the on understanding the trading risk and what involved in the trading risk. But that's easier part because that's something like fully in your control, right? Like what the strategy, what your systems are going to do in these different scenarios. You know how you understand this. What's becoming more interesting is risk that you don't directly control, right? So like one of the big ones recently in digital assets is everything related to regulation, right? I mean, we can talk in another 2 hours about US stance on crypto and how it's going to change over the next 4 years. But this has definitely been a big risk for the industry. It's been a big risk for hedge funds in the space, exchanges in the space, access to different markets, different products. So this risk is it's something that you have to be always aware of and understand, and working with typically different service providers to really solve for it, right? Like legal compliance are my best friends. We spend a lot of dollars on working with those people, and this is constantly evolving market. So you constantly have to be on top of those conversation and reviewing new regulation. And we will see a lot of changes next year in the US. So it's very interesting. And then you have different other counterparties, right? So you have custody, you have exchange. So this is also different sorts of risks. The good thing is that after everyone, of course, is aware of FTX, right? So this has been already more than 2 years. It's kind of difficult to believe how fast the time goes.
Incredible. Yeah.
But the good thing from what happened is that actually the industry evolved very significantly over the past 2 years, right? So when I was trading digital assets in 2017, it was a very different market than now in 2024, right? It's crypto years, I call them. It's like in crypto years, I'm very old. Yeah.
You're a veteran. If you've been trading
Yeah,
since
exactly.
2017, you're a veteran.
Exactly. So a lot of infrastructure has been built. It becoming more and more looking like traditional finance infrastructure. You have players like Fidelity and similar names entering the space for custody. You have different prime brokers really like moving forward with innovation and making sure that there's lower counterparty risk. You have more technology-driven solutions as well on both custody and off-exchange settlement. So there is a lot of work being done, and I think we are thankful to FTX for this to happen. To actually now infrastructure and exchanges and prime brokers and custodians and fund administrators, everyone is now ready for it to be much more kind of familiar to institutional investors. So we've been seeing that large institutional players now starting to feel comfortable with the infrastructure that's been built. And of course, ETFs became possible. You have more and more institutional products being available. So the industry really evolved in this space, but that's something that you also constantly need to be on top of, understanding different solutions, understanding what's better, how to incorporate it into your flow and things like that.
Absolutely. And you brought up some interesting points around FTX, and I was going to ask you with respect to exchange risk. How do you think about that with respect to your portfolio allocation?
Definitely. So on managed accounts, it's actually very easy to do because it's kind of investors. Some of the investors, they may want to prefer certain solution themselves, and we have understanding of different solutions available on the market. So we can basically tell this is the advantage of this solution versus this solution, like why qualified custody may be better, or why maybe like technology-driven approach may be better. Where this custodian is regulated, where this exchange is regulated, right? So we understand kind of the whole landscape of the market. And for I would say for a lot of investors, it really depends on their preferences. So some investors, they may only be comfortable with someone like a qualified custody. So they can only trade on like Coinbase, let's say, and a couple others, right? And then some other ones, they may want to use custodian that's Asian based because they're themselves based in Asia and they feel like more connection to this custodian. They may understand a little bit better their technology and things like that, right? So it kind of depends, and it's investor's choice typically. So this is advantage of managed accounts for those, let's call them more sophisticated investors who did their own research and able to set it up. And we are always happy to help them understanding the landscape and understanding the different players in the space. Then on overall, kind of like on the fund approach, right? Like now there's a lot of good solutions available and more solutions becoming available, right? So there is now bigger players, like, as I said, like someone like Fidelity moving into the space. There is some banks as well. So it's becoming more kind of like easier to manage the counterparty risk.
Mm-hmm, mm-hmm. And your clientele right now, what does that look like?
Yeah, so a lot of our clients, they're whether fund of funds or professional asset managers that want to expand their portfolio of strategies. So they come to us and they can choose like 3, 4, 5 different strategies that fit their portfolio. We also work with a lot of large crypto holders that may want to generate yields on their Bitcoin or Ethereum holdings or other altcoins as well. So you can think about different players that have a lot of crypto on their balance sheet, right? So we have some corporate treasuries, different players, but you get sense, right? So, and then a lot of family offices. So our initial group was kind of more crypto, let's call them crypto native or crypto familiar family offices, right? So they may invest in the space early on, or they understand, like they invested from VC standpoint, so they have good understanding about the space. What I've been seeing more recent is traditional family offices. So they're new to crypto. So they come to us and we have to educate them. We tell them how it's done. We explain them different risks. We explain them the strategies, the markets, the products. And it's been extremely successful recently. So we've seen very large family offices coming into the strategies now.
Oh, that's excellent. That's really good to hear. You have a marketplace. Maybe you could talk a little bit about that and some of the tech outside of the investment-oriented tech that you've built.
Yeah. So as I mentioned, we basically built like a wealth management platform. So it's going from all the way from the investment in the strategies all the way to managing and reporting. So for the marketplace, it's something that people see and they can choose and compare different strategies. So they may want to compare returns of 5 different strategies that we have. They may want to see correlations between those strategies. They may want to download data to do their own analysis. A lot of questions that they may have is answered on this marketplace, and the data is pretty much real time. So we show like a previous day returns, which is very impressive because with a lot of funds, you just get like 45 days after, right? Or 30 days after dog sampling or something like this. But here you can see exactly how the strategies performed yesterday. And this is very unique because the market and crypto moving so fast that having this visibility and being able to make decisions fast is kind of like separate someone from making big returns and entering the space when the opportunities persist versus like kind of missing out on the opportunities by waiting too long. So 30 45 days in crypto space is like a lifetime, right? So it needs to be very fast. So basically our marketplace allows people to see different strategies that we run, compare them. We have examples of new blended portfolios that we created, combining multiple strategies. And we also have ability for people to basically get their own portfolio, custom portfolio. And then when they invest, they get access to what we call dashboard. And this is basically a portfolio view. They can see how the different strategies that they invested perform. This is real time. So they can see exactly how much money each strategy making. They can see exactly the risk that they're running. So it's kind of like gives them a lot of transparency in what's happening, which is something that's been needed in digital assets for a long time, because there was a lot of stories about crypto hedge funds that basically they're supposed to be market neutral, but they actually went and buy some small coins and then they went bankrupt, right? So with this visibility and transparency that we are offering, people can see exactly how much risk, where their assets sit, and how the strategies are performing. And then we have reporting for like back office, for accounts and things like that. So it's, of course, not as robust as like fund administrator, right? And that's why you need third parties like auditors and fund administrator. But this is something that gives people real-time view and real transparency in what's happening behind the algorithms.
Well, look, I mean, as somebody who's done this for a long time, there's many good investors out there, but to really kind of build the organization and the operational setup, you need all of the pieces to build something robust and long lived. And to that point, I guess I'm curious as to what is your longer term ambitions and for ML Tech. As an example, what it sounds like this is a very high capacity strategy. If you can take in traders from all over the world, and you can use artificial intelligence techniques and automated risk management. I mean, it seems like the sky's the limit. Have I?
Yeah, no, you got it right. You got it right. So the idea there is to become one-stop shop for institutional clients, right? So they come to us, they get access to a variety of strategies, they get access to custom portfolio that's built by AI and combines, of course, their specific preferences. So it's multi-asset class, it's different products, it's different exchanges, different strategies. So really the sky is the limit there. So you can think about next generation wealth management solution.
Mm-hmm, mm-hmm. Well, phenomenal. Congratulations on your organization. I have been watching it for a couple of years and I've been thoroughly impressed. Took a look at your deck and, we can't talk about performance, but very interesting to say the least. And thank you for being a Medium client, of course, as well, and a great supporter of the alts marketplace. And I think both organizations have some, really good runway in front of them.
Yes, definitely. I appreciate all your help and great talking with you. And happy to engage in further conversation or answer any questions that the audience might have.
Yeah, and how do people get in contact with you, or can they follow you on social media?
Yeah. So we are very active on our LinkedIn. We passed a lot of commentary about the market, a lot of analysis. So our LinkedIn is just ML Tech. And then our website, institutional clients or qualified investors can sign up to our marketplace to see the strategies. And of course, we have our offering for Medium portal as well, and their contact details there as well. So they can contact our business development team if they want to learn more about the performance and how to get involved in this exciting asset class. So there's a lot of opportunity for the next few years.
Okay, and we'll make sure to plug all those in the show notes. So once again, Leo, thank you for spending some time with us this afternoon, and good luck for the rest of the year and the years to come.
Is your organization prepared for tomorrow's challenges today? How will you adapt to the future of investing? For Mindyuk creates intuitive and progressive tools for the next generation of fund management. Tools for fund administration of every asset class, digital investor onboarding, CFO-tailored consulting services, comprehensive tax reporting, and even a thriving community showcase for fund managers and service providers. Evolve with the future. Be formidable. For Mindyuk, adapt and prosper.